Well, all traders want to know how they judge success for themselves. For some people, it's money. For some people, it's trading a certain strategy well. Our guest is here to talk about that today, Tony Drager. Tony, thanks for being here.
Tim, good to be here.
Well, how do you judge success for yourself in your own trading?
Well, the most important statistic is my averages, average winner to loser. I don't want a strategy and someone to say to me, hey, it's 90% accurate, 80% accurate. That's great. First of all, it's hard. And secondly, does it have to be 90% accurate to make money? Because if it does, you're in trouble as soon as it comes off a little bit and your losers are bigger. So the most important statistic is my average winner to average loser. If that's 1.5 to 1, or even better, 2 to 1, now what does that show you? You could be wrong a lot and still make money. And I compare it to meteorologists. They're wrong all the time and they still have a job on the 10 o'clock news, right? That's what you have to do as a trader. Be wrong a lot and still put yourself in a position to make money, but you can't do that if you have bigger losers than winners.
So how do you kind of come back from those losers? I know traders and even myself, you have a time when you have 4 or 5 losers in a row. How do you kind of shake that off and if you know nothing has changed in the market, just to keep going and get to that winning percentage?
Well, I mean, you have to trust what it is you're doing. And for me, I use a strategy that's practical. It's something I use if I bought a house, a car, or a pair of shoes, and I just make it applicable to trading markets. So you have to have a strategy that you trust, because if you don't, and if it's not practical, you won't trust it and you won't use it, or you won't use it correctly. So that's the first step. If it doesn't raise your eyebrows as far as, hey, I see why this would work, then you're not going to, again, use it the right way. So once you get to that, you have to, I've been trading for a decade now, and you have to realize that you're going to have subpar performances throughout the day, throughout the week, but you want to keep that happening throughout the month. So one thing I do is I don't look at my trades per day or per trade. That's too much of an emotional roller coaster. I look at it at the end of the week on Friday. I add up all my statistics, and I just get more excited when I put the pluses down and make sure, obviously, my statistics are in order. The most important one is the average winner to losers. But what's really relevant or really important to strip emotion out and stay off that roller coaster is just to kind of dehumanize yourself. And the market doesn't know you had 4 losers in a row. You shouldn't either. So you have to be kind of robotic in your approach and just concentrate on Fridays, reviewing what you did Monday through Friday.
How long did it take you to really get confident in a strategy that you could do that and say, 4 in a row, doesn't matter, I'm still forging ahead, I know I'm right in this?
It's different for everyone. I don't think you're always building on that confidence. I don't think there was an actual time where I could say that was the turning point. I was kind of fortunate to start making money early on in my career right away, where I didn't have a lot of down spills or drawdowns, so to speak. So my confidence has been more of just building on itself. But there are triggers that people go through, and I think it comes back to understanding that a strategy is practical and you see why it would work. But I would say within the last half of my career, when I started to elongate my time horizon, I started to really realize that the market truly doesn't know where you're at, truly doesn't care about your position, so you shouldn't either. Just trade the strategy, implement it, be a robot, and leave the thinking for people who are the overwhelming amount of the people who, in fact, don't make money.
And then finally, do you have a benchmark? Do you say, I want to beat the S&P? Do I want to beat my peers? Anything like that where you're trying to win against?
No, because I've never looked at it as a percentage on my account. It's more arbitrary how much money I have in my account. I've always been an income trader, so it's always been after I get a certain amount of money over my account, I draw a check, and that's how I pay myself. So that's more what I look at. Goal-wise, I want an above-average living, and I've always said that. I could do things to make a blue-collar average living, which I think is great, but if you're taking risk and the unknown of what you're going to make every 2 weeks, every month, every year is always out there, you have to have an above-average goal. If you don't, then you really have to manage the heck out of your risk, because that unknown is crippling when there are jobs out there where you know what you're going to make every 2 weeks. Trading for 10 years, you become used to the fact that that unknown, you have to kind of answer for that, and that means having lofty goals and then just being patient working towards them.
Tony, thanks for your time today.
My pleasure, Tim.